My next guest heads digital asset strategy at one of the world's top investment banks and says appetite for crypto-linked products from institutional investors will only grow in the coming year. For more on the trends he sees, Mathew McDermott is with us. He's head of digital assets at Goldman Sachs, and it's great to have you here. Welcome.
Thank you very much for having me.
So the reason, not to be, the reason why I'm so curious about this is so we retail people can front run all the institutional demand that might be coming. So, it was actually one of the ways that I think turned a lot of the public onto crypto who weren't already believers was when they realized a few years back the institutions were going to start really getting involved in a big way. Yeah. So has that already happened, or is there a lot more still to come?
I think there's a lot more still to come. I mean, I've actually been running the digital asset business at Goldman for 5 years nearly now. And so we've seen, a couple of, this is almost like the second cycle. And the first kind of, I would say, kind of real bull run that I was involved in was very much kind of retail driven. And what we've seen kind of over the kind of following 2 or 3 years is actually a lot more regulatory clarity across the globe. And as a kind of byproduct of that, it's given confidence to the institutions to kind of invest and start to build out, their kind of digital asset.
What kind of regulatory clarity are you talking about? Because a lot of people still think, well, once we finally have this in the U.S., I mean, obviously it hasn't kept us from Bitcoin 100K, a lot of institutions, but for instance, could we see truly a lot of major multinationals putting Bitcoin on their balance sheet and that kind of thing?
I think it's conceivable, yes. And I think as we've started to see, over the last year and a half, a lot more clarity probably outside of the US. I think there's obviously been a big spike in the valuations across the whole crypto suite, as we've seen since the US presidential elections. That obviously is driven by what we expect will be probably a more favorable regulatory backdrop. And that gives confidence to kind of the institutions more broadly.
What was your aha moment was it for Bitcoin specifically or crypto as an asset class where you felt like, hey, there's something here that's really going to create value? Because there are still a lot of people arguing that the U.S. should not enshrine this in any way, that it's a waste of capital, counterproductive, harmful even.
Yeah, I think as a firm, we're obviously driven by client demand. And if you look at kind of what we're able to do today, we're very active kind of in the cash-settled derivatives options, ETFs. And that's where we've seen, clients, particularly from an institutional slant, become more active. Oh. And so for us, I think that has been, I think the realization beginning of the year with the ETF approvals, that to me was the real catalyst. And then if you've seen the performance over the last kind of 9 to 10 months has been phenomenal. I mean, you're over 100 billion now in terms of outstanding Bitcoin ETFs. Wow. ETH have started to get a bit more momentum. And that's, a mixture of retail, but increasingly more kind of institutions. And if you actually look at the kind of trading ecosystem, you're starting to see more products evolve, which actually are more user-friendly from an institutional perspective.
So going into 2025, what kind of products should we expect on that front?
Yeah, I think a continuum of what we've seen. I mean, I think, the ETF is a very good, solid, indicator of people's appetite for this space. As I said, it's grown kind of, exponentially this year. It gets investor protections. And so, therefore, people are getting confidence. And as you start to see more institutions come in, I'd expect it to be traded like other asset classes, structured products and things like that.
And so, in other words, more derivatives based on...
Well, potentially like structured notes. And I think as you start to see the ecosystem build out, you'll see clients have demand for different types of products, as they do for any other asset class.
100%.
So I don't think it'd be any different. So.
A lot of people say, I want my risk capped in some way,
exactly.
To know the upside, to know the downside, whether others are happy. Does the nature of this vary in any way because so many retail players say, and I know people who have made considerable amounts of money on this, and they continue to say, I'm holding it forever. I'm not selling it. I'm not doing much with it. But maybe they need to think about how to be able to tap that, literally live off of it if they want to.
As I say, I think the marketplace will evolve, and I think the ability to generate, kind of in a very orderly way, leverage potentially on your holdings, kind of pursuant to how kind of it manifests itself across the institutional marketplace today, I think in a very rational way, I think is positive. There are a lot of maximalists out there who want to hold, but I think, as I say, the product suite will evolve, and you'll just see more institutions leverage that.
And what is the significance of spinning off the digital asset platform, the DApp, I guess it's literally called? What is that meant to offer to clients?
That's what it's. When we look at the digital asset business at Goldman Sachs, you've kind of got a crypto kind of leg to the business, but then you've got a big focus on tokenization. So this is where you tokenize financial instruments. And you've started to see a lot of momentum build across, again, the institutional landscape.
I still don't understand that one. I mean, is the idea that, because you can trade financial instruments now, why do you need to tokenize that?
Well, a lot of it's about improving the efficiencies of the market. So the ability, for example, to settle within, a minute.
Instantaneously, yeah.
And it's just the ability to be more precise in the use of liquidity and capital. And also, over time, to actually kind of proliferate products to a broader cross-section of the market.
Oh, fascinating.
And so the digital asset platform that we've had a recent announcement on, that is something that we've actually been developing, within Goldman. And as we look to kind of develop and further kind of enhance its capabilities, we're looking to actually potentially spin that out.
Very interesting.